Hello everyone and welcome to another episode of the Daily Gwei Refuel, where I recap the latest news in the Ethereum ecosystem. I'm your host, Anthony Sassano, and today's the 3rd of January 2023. Alright everyone, let's get into it. So we have a weird update from Genesis Earn slash DCG. So you guys have probably been following along with this quite closely, and the whole drama around DCG slash Grayscale and Earn and all these kind of massive amounts of debt that's owed to certain parties, all stemming from, I guess, the collapse of Terra, FTX, 3AC, and all that other good stuff last year. But this update came from Cameron Winklevoss, who is obviously part of the Winklevoss twins, one of the co-founders of Gemini. And it was a weird thing to read. I mean, I'm not going to read out the whole thing, but basically, he was kind of accusing Barry, who is the founder and CEO of DCG, and which is the parent company of Grayscale, of not doing everything they can to plug the hole that is in the Earn program, and that is obviously the hole for the users, which is I think $1.6 billion or something like that. And then Barry replied to this tweet by saying DCG did not borrow $1.6 billion from Genesis. DCG has never missed an interest payment to Genesis and is current on all loans outstanding. Next loan maturity is May 2023. DCG delivered to Genesis and your advisors a proposal on December 29th and has not received any response, to which Cameron Winklevoss replied by saying, "There you go again. Stop trying to pretend that you and DCG are innocent bystanders and had nothing to do with creating this mess. It's completely disingenuous. So how does DCG owe Genesis $1.6 billion if it didn't borrow the money? Oh, right, the promissory note. Will you or will you not commit to solving this by Jan 8th in a manner that treats the $1.1 billion promissory note as $1.1 billion. Now, I don't know the whole story here. I don't have it in front of me. There have been a bunch of threads I've seen on Twitter talking about this, but I think that when trying to find which one of these characters to believe, it's kind of hard to believe any of them. I would say that it's probably better to err on the side of them all being in the wrong to some kind of point. And the fact that Grayscale is a lending desk, and we've seen a lot of those lending desks blow up this year, or a lot of the, I guess, over-leveraged apes, even if they were funds and VCs and big trading shops blow up this year, it's probably better to err on the side of there being this massive hole that actually exists. But I think I saw a thread that basically explained that what Cameron and Barry are doing here is basically just battling it out publicly to try and get some public support, try and kind of frame it as positive for either one of them. But when I think about that and when I look at that, I think this is just very childish for these massive, I guess, companies in this space to be for the founders of these companies to be behaving in this way in a very public forum is kind of very embarrassing, and just speaks to the fact that we need generally better actors in this ecosystem. Not to say that the Winklevoss twins are bad actors and that Gemini is a bad platform. I definitely thought Barry Silbert has been quite shady for a while, for a long while actually. Many people won't know this, but Barry Silbert was one of the chief people behind pumping Ethereum Classic in 2016, and he's continued to do that for quite a while. And he's also been involved with a lot of other things as well. And people have thought that he was really smart and, he was playing like 5D chess or whatever. He was just early. And I've always maintained that. He was just very early. He created all these companies and he was early to a lot of things, made a lot of money off Bitcoin and ETH and other kind of assets early on. But I don't think he's got any special prowess to how he operates. Now, because of this, I definitely do believe that DCG have this big hole here, and they do owe this money, but it just depends on what agreements are in place. It depends when the debt actually is due. It depends on what the lawyers can come up with and what I guess like fixes and band-aids can be come up with, because I don't think either Gemini or DCG or I guess Grayscale want to go into bankruptcy proceedings, as I've just explained before. Those are lengthy, not good for anyone. The business is basically over at that point, and it's not a fun time for the customers especially. And I guess like what Gemini is trying to do right now is just make their customers whole, and what I guess like DCG or Genesis is trying, Grayscale and Genesis, I should say. So I've been saying Grayscale, I should be saying Genesis as the lending desk. Grayscale is actually the funds, right? Like GBTC and ETH. Genesis is the trading desk. But what Gemini is trying to do is just get Genesis to pay up so that they can fill the hole for users here, which, look, I don't know which way it's going to go. I'm sure there'll be some amount of money paid back, and I'm not sure if they're going to miss the payments or what agreements they're going to come to, or if they file bankruptcy. And then people are saying, well, if Genesis files bankruptcy, that means DCG has to pull assets out of other places to cover that debt. Maybe they pull it out of Grayscale, which would lead to a sell-off of GBTC and ETH. I don't think so. I mean, they're different things. They're set in like kind of trusts and stuff like that as well. So it's kind of like a different ball game, but this is something of like a contagion that's obviously still not resolved and something to pay attention to. That's why I bring it up today. But anyway, you can go check out Cameron's open letter here. I'll link it in the YouTube description below. I don't have any threads handy about with a better explanation of this whole drama, but I'm sure you can find them on Twitter or even on Google if you Google this. All right, so an interesting little graphic that Data Always put out as part of a write-up they did on the year in Blockspace Demand across basically many different blockchains in crypto. So they said, they captioned this graphic by saying, tell me again about how Bitcoin is a blockchain that people want to use, when you can see that on May 1st in 2022, there was one day, that was that day, of Ethereum fees, which dwarfed the whole year of Bitcoin fees. And this was the other side mint. So other side was the Bored Apes ecosystem project that they're doing, I guess their metaverse project that they're doing. That was that day where essentially there was over $200 million worth of fees going to that were paid to the Ethereum network, most of which were burned, of course, but then some went to miners because we hadn't merged yet. But that one day was more fees than Bitcoin had for the entire year in millions of US dollars by, I don't think it was double, but like 50, 60% more in just one day. Now, obviously, that's an outlier, but if you look at the whole year of 2022 and look at the whole year of 2021, the picture is still the same. And in their kind of write-up here, they actually have a chart that goes through not just Ethereum versus Bitcoin, but Ethereum versus everything. And look at this. This is the nice little graphic here, which is kind of cut off a little bit on because of my camera. But basically, you can see here that Ethereum's total block space demand for 2022, as measured by fee revenue in US dollars, was $4.3 billion for the entire year. And then you can see for Binance Smart Chain, which was second place, was $745 million. Tron was third at $174 million. And then Bitcoin coming in fourth with $141 million for the whole year. And then you have a long tail of other networks such as Solana at $26 million, Phantom at $23, Polygon at $20, Optimism at $18, Dogecoin at $1.6. Arbitrum isn't here, but I believe Arbitrum would be similar to Optimism. But this just goes to show like how Bitcoin's block space demand is so low relative to smart contract chains. Binance Smart Chain obviously is an EVM compatible smart contract chain, and so is Tron. As I said before, Tron is basically, so there are two major things on Tron. One of them is Justin Sun using it as his personal little chain where he's got most of his wealth or a lot of his wealth stored on it, and he's doing a lot of stuff on there. But it's also used for stablecoin transfers because it is very, very cheap compared to Ethereum Layer 1, and Tron as a network is supported across many different centralized exchanges, so it's actually pretty good for cheap stablecoin transfers. And then BSC is very similar to Ethereum because of its EVM compatibility. It's pretty much a fork of Ethereum, right? But it has its own ecosystem on there that Binance obviously funnels users into. But then Ethereum still dwarfs all of these networks. Even combined, all of these networks don't even come close to the amount of fees that were paid on Ethereum Layer 1 in 2022. Now, the reason I bring this up is twofold. One, it shows that obviously Ethereum block space, the only product that the Ethereum network sells, is in extremely high demand, and it still is today, even at these low gas prices. At these low gas fees, and during 2022, the gas fees were much lower than 2021, and we still saw this kind of demand here. And then two, Ethereum doesn't actually rely on fee revenue for its network security because we have perpetual issuance with in a proof of stake world, and then we burn most of the fees to offset that issuance. And Ethereum isn't deflationary right now since the merge, but on net since 1559 went live, it is deflationary. So that is an extremely strong property of Ethereum that I've talked about a lot before, and obviously it's part of my bull case for Ethereum. Whereas Bitcoin, on the other hand, relies on fee revenue long term for its security budget because it has the halvenings, it has a fixed supply, and within a couple more halvenings or 2 to 3 more halvenings, Bitcoin's security budget is going to be severely compromised because its fee revenue does not make up for that. I think as a percentage of security budget here, the fee revenue is less than 1%. I think of the fee, of the security budget, because the block reward counts for so much of it. So that means that once the block reward gets significantly reduced in another 2 to 3 halvenings, Bitcoin security, unless the price of BTC goes up significantly, is going to be severely wounded, right? It's going to become insecure. And whereas Ethereum does not have this issue, even though Ethereum has all the block space demand. And I don't see anything driving demand to Bitcoin block space, because really there's only one thing you can do with Bitcoin, the Bitcoin network. It's move BTC around. And there just isn't that much demand to move BTC around, especially because BTC is supposed to be a store of value first and a money second. And no one's really using BTC as money, right? And then people will say, well, demand from Lightning Network channels opening and closing is going to account for lots of fees on the Bitcoin network. It's not, because no one cares about Lightning Network. No one's going to use Lightning Network. The adoption of Lightning Network is pathetic compared to its competitors, such as Ethereum and BSC and Tron and all these other smart contract chains. So I just wanted to highlight that. But I'm not going to go on more of a rant here than I already have, but you should give this blog post a read from Data Always, talking about the Ethereum block space demand and all the trends that we're seeing and different things here. It goes into much more detail than I have, which I'll link this in the YouTube description below for you to do so. But I just think that this chart is extremely striking, and the fact that Ethereum was able to do 60% more fees in one day than Bitcoin did in its entire year just speaks to how in demand Ethereum's block space is than Bitcoin. And some people will FUD this and say, well, that's because Ethereum charges such high fees to use its network. People are forced to do this. It's like, no one's forced to use the Ethereum network. They're willingly doing this, especially during an NFT mint where people are literally willingly paying the fees because it's worth it for them to do so, because they believe they're going to get more value out of the NFT that they're minting or buying or whatever, as opposed to the fees that they're paying. And obviously, a lot of this activity is going to move to layer 2s going forward, so it's going to be funny to see how layer 1 block space demand kind of changes from here. But I've discussed that before on the refill. I'm not going to go into it today. But yeah, you can check out this blog post for yourself. I'll link it in the YouTube description below. All right, so we have a great thread here from Jay Trilly today, which starts off by saying, EOF consists of 5 EIPs set to be implemented in the Shanghai hard fork in parallel. This includes new instructions, deprecating old instructions, deploy time validation, and more. This will radically change EVM bytecode. It's long as AF, but let's get into it. And this is a thread talking about all the different EIPs coming as part of the EOF umbrella that I've talked about in the past. It is for developers. If you're not a developer, you won't understand what they're talking about in this thread, but I just felt it was worth highlighting because I've talked about EOF a lot on the Refuel, and I've talked about the EIPs that are going into that, and that is definitely something that you should be paying attention to here. I don't think that EOF I don't think the EOF EIPs are actually guaranteed to be included in Shanghai yet. That's just a note that I should make here. There was still a lot of testing to be done. There was still a lot of things to be discussed. I think on the next All-Core Devs call, we're going to know, which is in a couple of days, I believe. We're actually going to know if the EOF EIPs are going into Shanghai. But if they don't make it into Shanghai, it's most likely they're going to be in the next hard fork after that as part of the hard fork. The EIP 4844 is hopefully going into as well. So yeah, but anyway, you can go give this thread a read. I'll link it in the YouTube description below for you to do so. All right, so Jasper here from the RocketPool community has put out a tweet thread saying, attention, data analysts, Web3 devs, writers, and more. The Grant and Bounty Committee for RocketPool is accepting applications. There is a lot of money up for grabs as we start to fund our community. I'll be breaking down what the 3 types are and more. And this is a thread here which you can go check out. So if you're interested in applying for a grant or a bounty here, in order to help out the RocketPool community, then this thread is for you. There's all the relevant links and everything in the thread and information as well for you to check out, which I'll link in the YouTube description below. But I just wanted to highlight this. This is another way to get involved with the Ethereum ecosystem, specifically, obviously, the RocketPool ecosystem, which you guys know I've warmed up to a lot over the last few months, and I'm very, very bullish on them as a community and as an ecosystem for sure. So you should definitely check out them and see if you can get involved. I'll link it in the YouTube description below. All right, so speaking of things that are growing over the past, I guess, few months, ENS just continues its growth unabated, really. I mean, you can see the ENS stats here for December of 2022. There were 53,000 new .eth registrations, $1.6 million in protocol revenue, 22,000 new ETH accounts with at least one ENS name for a total of 630,000, 6,700 avatar records set, and 2,100 DWeb content records set for a total of 18,100. And you can see it in the chart here, what the growth is kind of looking like for these new things that they're tracking, such as avatar growth and DWeb growth. What I find really cool about ENS's growth is that it doesn't seem to be affected by bull and bear markets. It seems to be growing organically from people wanting to buy ENS names to set, for their Ethereum address, to set for their identity. And that's something like what avatars are speaking to as well, that they want to have an on-chain identity. Yes, there's speculation when it comes to ENS names. Yes, people like to buy low character names and resell them and everything like that. Just like any NFT out there are special properties for different NFTs, rare names, all that good stuff there. But ENS generally has just been on an uptrend, and I love seeing it, especially just seeing how many new .eth registrations there are and how much protocol revenue is being made by the ENS DAO here. And this is, I believe there's no liquidity mining programs for ENS. Like the ENS token isn't being paid out to people to do this. So it's just really cool to see that this is a lot of organic growth here, as well as people just, I guess, speculating on domain names, or ENS names, I should say, which is totally normal. There's nothing wrong with that. I think people have the tendency to think that just because something is speculative, that means that there's something wrong with it. And I always felt that was a weird thing to think, because speculation makes crypto go round. It makes the world go round. It's inherent to all of us. We all speculate in one way or another, and it makes the markets work. It makes crypto work. So we shouldn't really be, I guess, against speculation until it gets to the point where it's like incessant speculation or like unfettered. It becomes really dangerous, like what we saw with Terra, right? That became very dangerous. What we saw with all the leverage, all the over-leveraged people in crypto, that's where it can become, very dangerous. But speculating and people just entering into these markets willingly and treating them like healthy markets instead of unhealthy ones, I think is good for the overall ecosystem. But yeah, congrats to ENS on another big month in December here. All right, so Scroll has announced today that on January 9th, their team will be performing a scheduled pre-alpha reset in order to roll out some new and exciting performance optimizations that will help drive a higher throughput in Scroll's pre-alpha testnet. Details are in this thread, which I'll link in the YouTube description below. But great to see that Scroll's pre-alpha testnet is continuing along here. As you guys know, Scroll is building a ZK EVM as part of their kind of rollout here, as part of their layer 2 rollout, I should say. And they've been working very hard on that. I am an investor in Scroll, just a disclosure there for you guys. But it seems that they're making really, really great progress. And I love seeing the progress of the layer 2 teams generally, especially the ZK AVMs. But just a heads up for you, if you have been using the pre-alpha testnet here, there will be a reset, and all the details are in this thread, with along with the upgrades that are coming to the testnet as well. Hopefully we get an alpha testnet and then a beta testnet and then mainnet from Scroll relatively soon. The ZK VMs, they're all coming. There are, a lot of them are in testnet phases right now. A lot of them are being tested. You can go check them out for yourself. But yeah, definitely check out this thread from Scroll for more details on that. I'll link it in the YouTube description below. All right, today Mike here from Sylph Dapps, hopefully I said that right, has put out a tweet saying, or covering something that I covered a few weeks ago, which was the NFT Loss Harvestooor. And that was that smart contract that CoinLedger had developed that allowed you to sell your NFT for some very low value to a smart contract that basically allowed you to claim the loss on that NFT. If you obviously are at loss because it's some NFT that isn't worth very much or is basically worthless, you can sell it to this contract, and that will always be a buyer for you at some really low price. Well, now you can actually do the opposite with what Mike has built here, where you can basically do the NFT Repurchasooor, which basically means you can buy the NFT that you sold to the Harvestooor contract for the same price that you sold it to. And this is a front end to do that. So let's say you sold one of these NFTs to the contract and you said, oh, okay, well, I'm just writing off this NFT. It's a loss. It's worthless, whatever. And then for some reason, it has a resurgence and it's now worth a lot more than you sold it to the contract for. Well, lucky you get to go rebuy that NFT for the same amount that you sold it to the contract for, and basically that becomes your cost basis. And then you can, if there is a value for it on the open market, you can immediately make a profit on that if you want to. So just really cool to see that Mike has built an easy to use front end here for people to do that. So maybe it's worth you checking this out. If you have used the NFT Loss Harvestooor, maybe it's worth checking the NFTs that you sold to that contract and see maybe they've had a resurgence, because NFTs are pretty wild. They're pretty random. There are some that just pop off randomly for whatever reason, and maybe that is something that that you've missed, well, now would be a good time to check it out. So I'll link Mike's tweet in the YouTube description below. You can go check out the what he's built here. But really great to see the community, I guess, building on things that are being built by companies like CoinLedger. I was a really big fan of the NFT Loss Harvestooor, so I'm a really big fan of the Repurchasooor as well. It basically completes that loop there where you can sell and buy, which I think is a really, really great resource for people to have. All right, just wanted to give a shout out here to Bankless's new YouTube channel, which is called Bankless Clips, which is basically a bunch of really informed videos around Ethereum, crypto, layer 2s, NFTs in general from David Hoffman. And he put out a new one today, actually, called Ethereum Won the Bull Market, now ETH is winning the bear market, and all talking about ETH season, talking about how all the goals that Ethereum is kicking in a less than 15-minute time frame here. So you can go give that a watch as well. The channel itself will be linked in the YouTube description below. And some of you may point out that I'm not subscribed to the Bankless Clips channel. I am, just on my personal YouTube account, not on the Daily Gwei YouTube account. So just so you know, I do have some subscriptions on the Daily Gwei YouTube account, but I don't really use it. I use my personal account. But you should definitely go subscribe to it if you're a fan of Bankless, which you all should be because they put out amazing content. So I'll link this in the YouTube description below for you to go subscribe to. All right, to round off today's episode, I wanted to highlight two things from Domothy. One, he did an AMA about Ethereum the other day. I think it was yesterday that I forgot to highlight, and I actually haven't retweeted it yet, which I will do here, where he gave a lot of really great answers to these questions that were asked of him. And just for those of you who don't know, Domothy is a long-term Daily Gwei community member who also recently joined the Ethereum Foundation to work on research topics and things like that. So great to see him doing this AMA. But one thing I wanted to really point out here was a question that Trent answered and an answer from Domothy to that question. So Trent asked the question, what do you think about quote-unquote ossification and when should a protocol stabilize? And Dom answered, ossification is a Bitcoin meme. IMO, the Ethereum equivalent, should be homeostasis. The chain self-regulates to keep its core properties intact forever through cryptographic means first, then crypto-economic means, then through the social layer as a last resort. I couldn't have thought of a better answer than this. This is amazing. I mean, it kind of reads like something that I would say on the refuel because I have actually touched on this a lot of times, but I've never actually used the term homeostasis before, which I think is a perfect description of what Ethereum should be going for. I've never been a fan of ossification, and ossification is defined by basically what Bitcoin is today, where the layer 1 doesn't hard fork, doesn't upgrade, there is barely any changes made to Bitcoin in general, and when those changes are made, they're done in the form of opt-in only. So like a soft fork, they call it, where essentially the whole network has to voluntarily opt into it, over time, right? Rather than it being done in a hard fork, where hard forks are also a voluntary thing where you have to basically opt into it yourself. And if you don't want to, you don't have to run the software to opt into it. You can go to another network if you want. But there's a different school of thought between Bitcoin and Ethereum there. I don't want Ethereum to ever ossify like that. I don't think it's beneficial at all. I don't think that Ethereum should ossify for a very long time. I've said before that maybe in the future, maybe in 10, 15 years, it should begin to, I guess, look like it's ossifying. But I don't think that should be the case now that I've kind of read Domothy's reply here, which makes a lot more sense, where it should enter that homeostasis kind of state where the chain is self-regulating most of the time, to keep its core properties intact, such as its monetary policy and its core promises to be a settlement layer and what it actually does for participants on the network through cryptographic means first, right? Through the actual protocol means first, then crypto-economic means through obviously the consensus backed up by ETH's value and ETH's economic properties, and then through the social layer as a last resort. As you guys know, I always talk about this. The social layer is the be-all, end-all last resort. It is where we go to when everything else has failed, when the cryptographic means have failed, when the crypto-economic means have failed, then we really only have the social layer as the last resort. And just to further explain this for you guys, the cryptographic means is the network itself, right? Is the core protocol rules, the things that are baked into the code. That is the cryptographic means, right? The consensus engine that Ethereum runs, all the code that backs up the EVM, everything there. If something wrong happens there, then you would expect the crypto-economic guarantees to kick in, which is obviously part of consensus, where each economic value gives the network
network security. It costs such and such amount to attack the network because you would need to acquire such and such ETH, or you would need to attack the network and then you would get, there's a risk of slashing. And that's in protocol slashing. And then there's social slashing as well, which is where the social layer would kick in, where if the cryptographic means have failed, so there's some major bug, and then the crypto economic means have also failed or have failed as well, not both of them have to fail at the same time, then the social layer kicks in to fix that. For example, major bug, there's a monetary policy bug, you can print infinite ETH, and you can't fix that in protocol. Well, you have to go to the social layer. Social layer basically says, well, we're going to reverse what happened here. We're going to do an irregular state change to get rid of this bug. We're going to fix it, and then we're going to go on our merry way. And that's how that would be fixed, by the social layer. That's not fixed by any other means. And then a crypto economic one would be basically in protocol slashing, where essentially some percentage of the network is acting against the network rules, and then they get slashed crypto economically. Basically, they lose value, they lose ETH value, and they get kicked out of the active validator set. So I thought this was just a really great way of breaking it down. I thought Domothy's terminology of homeostasis instead of ossification is what Ethereum should be aiming for. And yeah, I just wanted to add my little flavor there. But you should definitely go check out Dom's whole thread, which I'll link in the YouTube description below. It's a lot of really great questions and answers here. Basically felt like a Daily Gwei AMA that I do as well, which reminds me, actually, there is going to be a Daily Gwei AMA this Saturday, so definitely get your questions in the AMA series channel, in the Discord channel, which you can find a link to in the YouTube description below. You can ask anything you want about Ethereum, crypto, whatever you want to ask about. I'll do my best to answer it for you, but be sure to get your questions in the AMA series channel before Saturday so that I can get them answered. I'll record the episode probably Saturday, get it out Saturday afternoon my time, get it out Saturday morning, probably US time, for you guys to enjoy that. And then from there, there'll be a regular 2-week cadence of these AMAs coming out as I used to do them as well. And you can go check out the previous AMAs. They're in the AMA playlist, which is linked in the on the YouTube channel, which you can go check out for yourself. But yeah, that's it on that note. That's all I've got for today. I'm going to cut this episode a little bit short for today, but I'll be back tomorrow as usual. So thank you everyone for listening and watching. Be sure to subscribe to the channel if you haven't yet. Give that video a thumbs up, subscribe to the newsletter, join the Discord channel, and I'll catch you all tomorrow. Thanks everyone.